Ever wondered if you could grow your wealth and make the world a better place at the same time? It sounds almost too good to be true, right? Well, today we're diving deep into a topic that's not just a trend, but a fundamental shift in how we think about money: sustainable investing. This isn't just about feeling good, it's about being smart. We're going to explore why sustainable investing is quickly becoming the new frontier for building exponential wealth. So grab a coffee, get comfortable, and let's talk about how your portfolio can power a better future and your financial goals. First, let's clear up what we mean by sustainable investing. You might have heard terms like ESG investing, which stands for environmental, social, and governance. Essentially, it's an investment strategy that considers these three factors alongside traditional financial analysis. The environmental part looks at a company's impact on the planet. Think carbon emissions, water usage, and renewable energy. The social aspect examines how a company treats people, employees, its customers, and the communities it operates in. This includes things like labor standards, data privacy, and diversity. And finally, governance is all about how a company is run, its leadership transparent. Are its accounting practices ethical? Is there a diverse board of directors? For a long time, the common belief was that you had to sacrifice returns to invest ethically. It was seen as a trade-off. Either make a lot of money or do good in the world, but you couldn't do both. That myth is being completely shattered. In fact, study after study is showing that companies with strong ESG performance are not just surviving, they are thriving. They often outperform their peers, especially in the long run. Why is that? Let's break it down. Think about it from a risk perspective. Companies that ignore environmental regulations are setting themselves up for massive fines, lawsuits, and public backlash. Just look at the financial fallout for companies involved in major oil spills or pollution scandals. These are huge portfolio-crushing risks. On the other hand, a company that's proactively investing in clean technology and sustainable practices is not just avoiding those risks, it's positioning itself for the future. As governments around the world push for greener economies, these are the companies that will be ahead of the curve, not scrambling to catch up. They have lower regulatory risk, and that stability is incredibly attractive to long-term investors. Then there's the social factor. In our hyper-connected world, a company's reputation can be made or broken overnight. A scandal about poor labor conditions or a data privacy breach can send a stock price plummeting. Consumers are more conscious than ever. They want to buy from brands that align with their values. Employees, especially top talent, want to work for companies that treat them well and have a positive mission. So, companies that prioritize their social responsibilities aren't just being nice. They are building a stronger brand, attracting better talent, and fostering customer loyalty. This all translates directly to a healthier bottom line. It's a powerful competitive advantage. And let's not forget governance. A company with a shady board, opaque accounting, or a CEO with unchecked power is a ticking time bomb. We've all seen the headlines about corporate fraud and scandals that wipe out shareholder value in an instant. Strong governance, on the other hand, means accountability, transparency, and good decision-making. These are the hallmarks of a well-run, resilient business that is built to last. When you invest in a company with strong governance, you're investing in stability and reducing the risk of nasty surprises down the road. So, we've established that strong ESG performance leads to lower risk. But what about the exponential wealth part? Where does the growth come from? This is where it gets really exciting. The transition to a sustainable economy is not just a minor shift. It's one of the biggest economic transformations in human history. We're talking about a multi-trillion-dollar global overhaul of our energy, transportation, agriculture, and industrial systems. Think about the Industrial Revolution or the tech boom. The investors who got in early on the key technologies and companies that powered those transformations made fortunes. We are in the early stages of a similar revolution right now, the sustainability revolution. Companies developing innovative solutions for renewable energy, like advanced solar panels or wind turbines, are just getting started. Businesses creating plant-based foods, pioneering circular economy models where waste is eliminated, or developing cutting-edge water purification technologies are tapping into massive, growing markets. The demand for these solutions is exploding. Consumers are demanding sustainable products. Governments are pouring billions into green infrastructure and subsidies. Entire industries are being reimagined. Investing in the leaders of this transition isn't just about avoiding risk. It's about positioning yourself to capture the incredible upside of this global shift. These are the companies that have the potential for exponential growth because they are solving the biggest challenges of our time. Their addressable markets are not just millions, but billions and trillions of dollars. Let's look at some real-world examples. The electric vehicle market is a perfect one. Just a decade ago, EVs were a niche product. Today, they are mainstream, and the companies that led the charge have seen their valuations skyrocket. This wasn't just a lucky break. It was a bet on a more sustainable future for transportation. Investors who saw that early and understood the environmental and social drivers behind it were rewarded handsomely. The same story is playing out in renewable energy, where the cost of solar and wind power has dropped so dramatically that it's now cheaper than fossil fuels in many parts of the world. The growth potential here is still immense. Another key point is innovation. The challenges of sustainability are forcing companies to innovate at an incredible pace. This pressure cooker of innovation leads to new technologies, more efficient processes, and entirely new business models. Companies that embrace ESG are often more innovative and adaptable. They are constantly looking for better ways to do things, not just to comply with regulations, but to create a competitive edge. As an investor, these are exactly the kinds of dynamic, forward-thinking companies you want in your portfolio. They aren't just playing defense, they're playing offense, constantly creating new value. So how do you get started? It's easier than you might think. You don't have to be an expert who spends all day analyzing corporate sustainability reports. There are now thousands of sustainable mutual funds and ETFs, or exchange-traded funds. These funds do the heavy lifting for you. They screen companies based on ESG criteria and bundle them together into a single, diversified investment. You can find funds that focus on specific themes like clean energy or gender equality, or broad-based funds that invest across the market using an ESG lens. When you're looking at these funds, it's important to do a little homework. Look at their top holdings to see what kind of companies they're actually investing in. Check their performance history and their expense ratios. Some funds are more green than others, so it's worth understanding their specific methodology. But the key takeaway is that the tools and products are there, and they are accessible to everyday investors. The shift to sustainable investing is no longer a question of if, but when and how fast. The flow of capital is undeniable. Trillions of dollars are moving into sustainable strategies, and this is creating a self-reinforcing cycle. As more money flows into ESG-focused companies, their cost of capital goes down, making it easier for them to invest and grow. This, in turn, boosts their performance, attracting even more investment. It's a powerful flywheel effect, and you want to be on the right side of it. To ignore this trend is to ignore one of the most significant forces shaping the future of the global economy. It's like ignoring the internet in the late 1990s. Sustainable investing is about aligning your portfolio with the future, not the past. It's about recognizing that the companies solving the world's biggest problems will be the world's most valuable companies. It's a strategy that's both pragmatic and principled. It's about creating wealth, yes, but doing so in a way that builds a more resilient, equitable, and sustainable world for everyone. That's a powerful combination. So, the next time you're thinking about your investments, ask yourself, is my money just sitting there, or is it working to build the future I want to see? By embracing sustainable investing, you can do more than just chase returns. You can become part of the solution and position yourself for the exponential growth that comes with it. Thanks so much for watching today. I hope this has given you a new perspective on how to grow your wealth. If you found this video helpful, please hit that like button and subscribe for more content on smart investing for a better future. I'd love to hear your thoughts in the comments below. See you in the next video.